Hi there, Serial Trader here. Just want to do a quick update on crude oil and XLE. And I think we're getting pretty close to some sort of top here. And I'll just go through my reasoning as to why I think that. Now, obviously, from our bottom, which was at negative 40.32, we had this initial impulse wave up. And just the scale of this move, it's very difficult to. Yeah, even log scale doesn't look good with that, just because of how abrupt and severe that was. But anyways, if I drag it back over here, I'm running under the premise that that was a major, like, multi-year, perhaps generational low. I mean, I don't foresee oil going below negative 40. Although I suppose anything's possible. If you can get to negative 40, you can get to negative 50, 60. But running under the premise that that's not going to happen again, because it seems highly unlikely, I'm going to say that that was our initial wave one up. Now, I remember I made a video a while back identifying this corrective move as a nice, buying opportunity for the next impulse wave up. So if we got one up, two down, that would indicate that this is our third wave up, okay? Now, I put or wave A, or wave B, or wave C, because it is possible that we have a 5 for A, 3 for C, and a 5 up, 3 for B and a 5 up for C, which would actually suggest going down and making new lows. But again, I highly doubt that we're going to go below negative 40. But I'll leave that just kind of analytically as a possibility here by putting or A, or B, or C. Anyway, so wave 1 up, wave 2 down, and then I think we're in this third wave up. And I think within this third wave up, we're extremely mature. So you can count a 1, 2, and then I've shown the subdivisions of wave 3 and wave 5 because they're fairly extended waves. So 1, 2, then 1, 2, 3, 4, 5 of 3, 4, 1, 2, 3, 4, 5 of 3, and even of 5. This fifth of the fifth looks very extended and mature. And I'll point out that we have some daily divergence here on RSI. So RSI making a lower high, even though price is making a higher high. I believe on the 4-hour chart, you have the same kind of development. We almost have this kind of rising wedge top, which in Elliott wave speak, would be an ending diagonal, like 1, 2, 3, 4, 5. And in ending diagonal, it's kind of that rising wedge formation. And then it resolves sharply to the downside once it completes. So I think that's a potential pattern in play to finish and make our top. And you can see higher highs in price, clearly lower highs on the 4-hour RSI. So again, preconditions for topping action are certainly there on momentum, and the pattern is certainly suggestive of it as well. Hourly, we're even making a slightly lower high here on the hourly RSI compared to higher high in price. So it's all there. The divergence is there. Let's see on the weekly. Okay, so weekly RSI is at 78 on oil. I mean, that's pretty damn overbought for oil, okay? We'll just say RSI close to 80. That's, unless we're talking crypto, apparently you can just go up to 95 and keep going. In a typical market, which I think oil is more in line with, anything close to 80 on weekly RSI is getting very overbought. And again, more importantly, within the context of divergence on daily and 4-hour and hourly, and a very mature looking sequence to the upside. Also, another thing, so a simple way of kind of forecasting some upside targets after you have a corrective move like this is doing that reverse fib extension. And of course, the common targets, 1.32, that's like first target, so that was 47-ish. 2, that was 53 or almost 54. That second target, and then third target would be the basically 3 times the range expanded to the upside here. That gets us to 64.06. You very rarely see it go past third target without having at least a reaction, if not a substantial pullback or correction off of there. So we're right up against that third target almost. So far we've got to 63.67. Third target would be 64.06. So given all that, we're close to that very high target, the third target. Very, very typical to back off from there if you even get there. It's actually usually not even achieved, that third target. That's a pretty, lofty target, but here we are, along with all that other stuff and a very mature looking impulsive sequence off of our corrective low there, which was at 33.64. I would suggest that at least, like a fourth wave pullback is coming pretty soon. And in the more bearish scenario, obviously this, we're just going to absolutely tank. But I find that a little bit doubtful here. And also, let's get back to that weekly chart. You can see this prior area of resistance that we fell down from badly. I guess we'll call it the pre-pandemic resistance. So we have a level here at 65.65, and then also 66.60. And again, our third target at 64. So we're coming up right into some serious resistance for multiple reasons here. So that's really why I'm thinking we're going to have at least a good pullback. I really wouldn't be comfortable putting on a fresh long here. My suggestion would be, if you just absolutely need to have a position on, here's what I actually think is a good idea. If you're long for much lower levels, then that's fantastic. This has been an excellent move, even if you didn't get in with as large of a size as you wanted. Sell the longs and replace it with some out-of-the-money calls, which, involve way less capital, way less downside risk, and you can still have some serious upside if this thing actually does just break out and keep going. I'd say that's a much more comfortable way to position at this point. And the same really goes for XLE. Now let me go with XLE here. So what I'm doing is looking at the weekly chart in XLE, and what kind of catches my eye is that this looks... Now, I know I discussed in a video quite a while back that this could be a truncated fifth wave low, and this is the initial impulse wave of a new XLE, much larger bull market. That's still certainly possible. But it does catch my eye, the potential that we just have a three-wave, a very large degree, but a three-wave move up, like a measured move. A, B, and then C equals A at 50.98. So far we've gotten as high as 50.58. We also have this... channel resistance that would come into play, currently around 51 and change, or 52. And as far as the... so I think I'll adjust this wave count a little bit, given the current price action. So I think we still got the 1, 2. Might have to move the 3 here, make this the 4, and this is our final fifth kind of blow off move up here. So if this is actually an ABC up, and we just are going to go down and make lower lows. Again, unlikely, but it certainly catches my eye. Usually, you at least back off from that measured move area. And let's see, RSI just about at 70, so that's getting at that overbought level. But no divergence here on XLE. So daily's overbought, but it's more overbought than the prior high, so no divergence. Same with the 4-hour. So not quite the same picture as far as momentum divergence there on XLE, but again, if oil pulls back, hard to imagine XLE doesn't. And also, we are coming still into this, I'd say, notable resistance on XLE. There's also a gap fill over here on this weekly chart. Well, there's a couple gap fills, but the first gap fill would be here at 53.63. So I might want to go up and briefly spike up for a gap fill. But again, I'm kind of doubtful we get there. We're coming right up to this equal relationship, this measured move relationship. We do have a very mature, look at our daily chart. We certainly have a very mature looking impulsive advance to the upside. And even within this last wave, you can get a lot of subdivisions to count it as nearly complete. But I'm more wary of that oil chart, which obviously makes me more wary of XLE. If there was no crude oil and XLE was just its own thing and had nothing to do with oil, which obviously it does, I would be less concerned. But because of what I see in oil, and then this possibility of a measured move here, just this equal, first leg up, pull back, second leg up, almost, exact same length as the first leg, that actually has me thinking that we're going to run into some serious resistance here. But what I was saying there with, okay, so if you're long from lower levels, that's great. I think it's an okay idea to get rid of the position and replace it with some out-of-the-money calls. So let's just say, I don't know, 55 straight calls. If this thing's just going to break right out of this channel and just take off and, be heading up to much higher highs, Then some 55 strike out of the money calls, longer dated, maybe 6 months out or so. Replace the position with those. Way less capital involved. Still good delta, huge upside if it actually works. And if this thing does pull back or even tank, then very little damage on the calls compared to holding, you know, the ETF itself. Much lower dollar risk, but you can still have a pretty nice upside potential. Kind of an asymmetric position there, right? Especially since you've been in from lower levels. You know, you can sell at a nice profit and still leave that upside potential with the calls and have way less risk underneath you if it does turn down. So anyway, that's all I wanted to share there on oil and XLE. Again, I think some caution is warranted. Could be wrong, but I'm definitely seeing some things that catch my eye. All right, Serial Trader signing off.